whatever you're doing, whatever time frame you're operating on, you really do need to have a roadmap. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome, everybody, to another episode of Talking Trades. Kevin Wadsworth and myself, Patrick Karim. And this is very critical, guys. It's part of the emotional management of the chart trading world or the trading world, investing world. And this is very, very difficult. It's the ability to change your mind, to have a mindset where if something happens, are you able to look at yourself in the mirror and are you able to change your mind, right? If you refuse to do that, then you could be in a heap of trouble. And Kevin's going to go into details about that.
Yeah, sure, Pat. Yeah, you could be in a whole heap of trouble, of course. Yeah. So I'm going to use an example of a forecast that we put out a number of years ago. And I'm going to talk you through what would have changed my mind about the forecast. Of course, we often talk about gold and silver, and we have a roadmap for what we expect gold and silver to do. It guides all of our decision-making processes. It's kind of the backbone, if you like, to our trading and investing strategy, whatever time frame you're operating on, whether it's daily, weekly, monthly time frame, whether you're waiting for monthly closes for confirmation of breakouts and breakdowns. But whatever you're doing, whatever time frame you're operating on, you really do need to have a roadmap of what that instrument is, what you think that instrument is going to do. And then you can react and respond according to what actually happens. So I'm going to show you the chart for gold here. Now, many of you have probably seen this chart before, but it was the gold forecast that we put out in 2019. And I think around about 2019, 2020, there were a number of different possible scenarios for where gold might go and what gold might do. But identifying this as being the most likely scenario was based on a bunch of evidence that involved looking at cycle analysis, looking at distances from moving averages and when the price was going to be stretched, looking at measured moves, all that kind of stuff. You bring all that evidence together. And also at the time, I started to spot this cup pattern that was forming. Now, there's no guarantee that the cup pattern is going to continue to form. But based on the evidence at the time, bringing it all together, it made the most sense for the gold price to move somewhere sort of close to the 2000 area and then pull back into the cycle low, which would likely be a pullback of several $100s, and then some sort of basing or bottoming pattern. By that time, of course, you would have formed a handle on this cup, and then for the price to break out and move up towards $3,000 or wherever the bull market takes it. So if we look at this gold chart and we take a look at that cup and handle pattern that I showed you a moment ago on the previous chart, you can see it's here. And that was the cup. Back in 2019, of course, the cup wasn't fully formed. And the projection was for the price to move up to around a couple of $1,000s and then consolidate for 2 or 3 years, which now with hindsight, of course, we know that that's what happened. But the point is, what would have changed my mind? What would have made me think that that wasn't happening? Okay, so just in general terms from that previous chart, I'll just pop on the chart here what I was saying was likely to happen. I was saying we're going to move to here, come down to here, and then go up there. So that's what I kind of suggested was the most likely path that gold would take in general terms. So the part of the reason for that, as I said, was cycle analysis and the 8-year cycle low. Is also the fact that by the time we got to $2,000, price would be stretched and would need to cool off, and that the size of handle that would likely be required would look something like that. So it's very much a sort of an estimation, a best guess, if you like, bringing together a lot of different pieces of evidence. And if I just pop some other indicators on the chart here, and I'll just put my monthly setup on the chart, what you can start to see now is some of the technical evidence that would have led me to start thinking that perhaps my thesis would have perhaps needed questioning. Now, when we started to correct, everything was going fine, and we started to form this handle on the chart. Everything was going fine. And then we started to break below the 3-year moving average. A little bit concerning at that point, but I'd suggested that the pullback could come down to around $1,600 or so. And at that sort of level, you've got the bottom of this volume node, and you've also got the bottom of this Ichimoku cloud here, and also a very important, and I seem to recall at the time, this was more in my thinking than anything else, was this sort of horizontal level, that sort of horizontal support level that comes in at around about just below $1,600. So you can see it was acting as support here, and then acted as resistance for a little while here. And there's a fairly clear sort of resistance level that would probably act as support. Had we broken below that and broken below this developing arc pattern, then I think I remember having conversations with Pat about it at the time, and sort of, we discussed whether we need to start sort of changing our overall bullish view on precious metals. I mean, we didn't, and price very rapidly began to start moving back upwards again, and the price of gold continued to follow the trajectory that we'd suggested was most likely. So you always have to have upside and downside sort of support and resistance levels in your mind. If I was making a forecast now or a prediction now, well, as I have done, in fact, about what I think is going to happen with the price of gold, it goes something like this. And you'll be aware of this if you've seen my posts, but looking for a pullback and then a resumption of the gold bull market is fairly simple at this point. Gold is stretched, and the most likely scenario, the most likely roadmap is a correction. Now, of course, many people think the correction will be much smaller, and some people think the correction is going to be much deeper. But when you zoom out and you look at the evidence and you look at what gold has just done, breaking through a multi-decade resistance line, it's unlikely, in my mind, that gold is going to break below that multi-decade resistance line. Whether we get quite as deep down as that and down to $2,800, $2,900 remains to be seen. But that's the overall roadmap. If the correction ends before then and starts to break above those previous highs, then all well and good, and bring that together with other technical chart evidence, and we'll be able to make that determination that we need to adjust the roadmap, and it's going to look something more like that. I mean, the price has already pulled back about $300. So it's a question of always questioning your thesis, always questioning your roadmap, questioning what you're expecting your stocks, your shares, your whether it's gold or silver, whatever it happens to be, always questioning that narrative, that story that you've built for yourself, because people do that. They build a story, they have it fixed in their mind, and you get kind of attached to your expectations. But you have to have a cutoff point. And for me, the cutoff point on this occasion is going to be around about $2,800. If we fall any lower than that, then I'm going to seriously question, that upside scenario, and you'll be starting to think about deeper downside scenarios, which are at the moment are low probability, and the higher probability scenario is something like that. It's all about weighing up those probabilities, constantly assessing what's going on. Do not be afraid to change your mind, because it's not changing your mind, it's facing up to the fact that there's a new overwhelming plethora of technical evidence that's coming in that means that you should be changing your forecast. You should be changing your view. It's not a bad thing to change your mind. It's not a bad thing to change your view. It just means that you're fully updating all of the information that's coming in, and you're not just blindly ignoring it and crossing your fingers and hoping for the best. Okay, that's it from me for this episode, Pat. Hope you enjoyed that.
No, you're right there. That was fun, and hopefully people could start using charts and spot when they should be starting to change your mind, right? All right, guys, thanks for watching. Make sure you like, subscribe, and get more content like this. Take care, guys.